everybody, it is the 6th of October 2009. Hope everybody is doing magnificent. And I'm going to start this report off with gold. Gold is big news right now in the markets as it is making new all-time highs in the country of America. Yes, country of America. It's not making new highs here in Canada. It's definitely not making new highs in Europe, and it's not making new highs down under. About China and Japan, not too sure about them. I'm not following their currencies that closely, but I have followed the Canadian one, and what I have seen is gold up 262% in this decade alone. So it's been showing as a great inflationary hedge. If you've been buying gold all decade long, you have been protecting yourself with inflation. Gold is up 166% in Canada, which is much lower than the 262 in the United States, and a lot of that has been due to the weakness of the United States dollar. At the start of the decade, in order to buy $1 American, it would have cost about $1.44. Now it's roughly $1.05, so we can see how the United States dollar falling has been a big reason for the new highs. Gold made its previous high in March of 2008, and it was $1,029 an ounce. At this time, that's when we were seeing the Canadian and US dollar par. So back here in Canada, gold is up pretty decently since that point, up about 5–6%, where in the States it's up only 1%. That's because the strength of the dollar that happened right around the stock market crash a year ago. As I was saying, it's about $1.05. Earlier this year, it was about $1.30. So the U.S. dollar had that significant rally, and it's been going down for quite a while now. The dollar's making potentially new lows very soon, as it is down again today. Everything is down today in the markets, or everything is up in the markets except for the dollar and the shorts, as we're near that 76 key level, which has been the low so far this year. And breaking that level, our next level is that 72 level that we had back in 2008. How much lower it can go below that, I am not too sure, because to me it's just an educated guess that it can significantly go lower. We're going to take a look at some charts now. This is gold's chart. These charts are from 2006, midway point. We can see we have broken above the 2008 highs. This chart is the Canadian chart, and we have broke out recently this year, but we are still below our March highs when we were about $12.50 an ounce Canadian. Currently, we're a little over 1,100, so we're down a pretty okay amount, as that would be about 8% it's down from its high so far. This is a Dow Jones priced in gold chart year to date. Peter Schiff at the end of the year predicted we would see 5 to 7. We hit a bottom of 7 in March. We went up to that level of 10. And that was a key support level last year. It looks like it potentially may act as resistance again this year. We have seen a pattern here where we might start to see lower lows and lower highs, with this lower high and now this lower low. Even with the stock market up today, that chart is lower today because gold is up a higher percentage than the Dow Jones is today, and the Dow's up 1.5%. So a lot of people are saying, well, are we going to have stock markets retracing back to like 9, 8, 7, 6, even 4,000, as Vision Victory has mentioned? And I don't know. I really wish I could tell you, but I don't. I would make my educated guess and say we're going to have some sort of decent retracement back. But if gold is 2,000, we could potentially see the Dow Jones at 12,000. And if the Dow Jones is 12,000, that would be a ratio of 6 to 1. And the Dow would be at the levels that they were at in 2007 and the start of 2008. But where would your buying power be, as this would be a great sign of higher amount of inflation with gold at $2,000 per ounce. So that is definitely something to be a little wary about. And of course, if the markets retrace back, maybe gold will retrace back with silver. I don't know when gold is going to top. I've been saying that I've expected about 12.50. Doesn't mean the markets are always going to do exactly what you want them to. And because of that, it's always best to just keep an open mind and observe the new events that you don't expect to happen. And then when you see them, then you make your necessary changes. We had a stock market on the Dow hit its 50-day moving average recently. And now with the rally that we've had over the last couple of days, it has managed to get above the 5, 10, and 20-day moving average pretty convincingly. And when I see this, you got to think, okay, wait a second. If you wanted to see markets selling off, or you were looking for a pattern for markets to sell off, you would have needed at least one of those key moving averages to act as resistance and then have another test of the 50. That doesn't look like that might happen. So when we see a breakout like this, you got to have your eyes open for potentially making new highs during this current bull market, which would probably mean the Dow Jones in that 10,000 area. As I've said, 12,000 to me is not an unrealistic target. If inflation gets out of control, then stock markets will get out of control. And some people have said, oh, there's not going to be inflation, it's going to be deflationary. If that's the case, the stock markets will make new lows that it hasn't seen since the earlier part of the 1990s, because deflation totally means stock markets selling off. But right now, there isn't any signs of deflation. We are having majority of the signs showing inflation. I mean, the prices on the streets that we have today, in our grocery stores and our energy bills, are definitely showing inflationary periods. So we've had Australia today decide to raise their interest rates 25 basis points up to 3.25% to 3%. They're the first G20 country to do so. We'll see if other countries follow, which to me would be unlikely, as the Australia governments are predicting their unemployment rate to go to 6%, which is much lower than what we got here in the United States and Canada. And even if they're using the same kind of methods, you pretty much have a rule to double it. If you double it to 12, that just shows you that the Australian economic situation seems to be doing a heck of a lot better than it is here in North America anyway. But I don't expect them to raise interest rates. Time for a very quick 10-second commercial break. On the flip side, I will be mentioning more on October the 25th. I'll be talking more for preparation storage, a little bit more on the Canadian economy, and a question of the day from silver. Now, October the 25th is coming, and obviously WEBBOT is going to be right, or they are going to be wrong. To me, I am not the type of guy that likes to use these exact dates. It's got to happen on this date, as I use particular time frames. And when you're using this type of strategy, that means you want to make sure that when you wake up every morning, that no matter what may happen that day, that you are going to be prepared for the worst, the best that you possibly can be. So whether it happens to be the 25th of October, whether it happens to be tomorrow, December, or any time in 2010, the key thing is to be ready for whatever event may shock the world. This means that you want to have enough food. I've been saying this for a while now. food for the short term and the long term. When I talk about short term food, that means having a 2, 4, 6, 8 month supply, whatever you can afford and store. And also having a 2012 set of foods. This is usually food that has good shelf life that you're going to want to have because times may get extremely rough later on. And food and water is the #1 priority. For water, have a game plan. I know myself, I live here in southern Ontario where there's a lot of fresh water. So if you happen to be lucky enough to live in an area with fresh water, then you want to be able to make sure that you're able to get it. And if you don't have that, well then bottle your own water. Even if you have to buy the fluorinated bottled water, fluoride water is better than no water. As there's always a preference to have clean water, which quite frankly, I stopped drinking a lot of bottled water when I found out it was fluorinated, especially because of the easy accessibility for me to get here in southern Ontario. Gold and silver and any other commodity, when you have that ready and the dollar is doing whatever tricks that it may pull from their financial instruments, you got your metals. You see gold going to 12, 13, 1400, which means silver is going to go to 20, 22, 23. If you were buying it cheaper, you can sell it for dollars again later on. And say you bought some silver bullion at $18 an ounce, then you turn around, you sell it for 24, you made $6 a coin or 33%. As long as inflation doesn't reach 33%, you're doing just fine with that type of trade-off. Money in paper dollars, you want to have some money in the bank, yes, unless you can manage to do without, as a banking holiday can potentially be possible. The electrical systems, you never know what may happen. Bank machines stop working. You have physical cash on you. Another strategy that can be done is to hold other currencies, especially in the United States. Hold a combination of euros, Australian dollars, Canadian dollars. This way, if the Canadian dollar goes up, you're going to be fine. And they usually work together. So the American dollar falls, the euro goes up, the American dollar goes up, the euro falls. So if you were to have half of your dollars in US and half of your dollars in euro, essentially you would not be playing these daily games of the dollar going up or down, because if the US dollar happens to go higher 1%, well then the euro should go down 1% and vice versa. So that's not a bad strategy to have also. However, remember that all currencies are fiat. As I've said, the euro, the gold is up 150%, in Canada it's up 160%. So this is showing us that all dollars are having inflation. If you just hold euros, you just hold Canadian dollars, you are subject to having your dollar lose on the inflationary measures. Also, the 2012 shift in consciousness. Remember, the powers that be are not dumb. In fact, if anything, they have more knowledge, more information, and if you think they don't know about any of these changes, you are highly, most likely mistaken on the matter. We've been hearing stuff about all of these bases they have been creating, the seeds that are being stored up in the Scandinavia area, I think, and this to me means that they are preparing. And a lot of times I look at what potential plans they may have. It may not be good for the middle class and the lower class, which is why I've been talking about doing the best you can to prepare for all of this. And Canada, Europe, probably the same thing. What do we expect? I've had one person ask, what is it going to be like here? Is it going to be better than the United States? I think most likely there's a good chance that it is going to be better, as I've mentioned before, with the water that's here in this area. I think all of Ontario and Quebec, you got a lot of fresh water there, but Northwest Territories, same deal, fresh water. I only got to presume that Manitoba, Saskatchewan, and Alberta have a nice amount of fresh water, maybe the Atlantic coast and Newfoundland and New Brunswick, Nova Scotia. Not too sure about their fresh water, but I know here in Ontario and Quebec there is a lot. We have a lot of resources like natural, like wood, firewood, as the amount of trees we have in this country is quite high. A very underpopulated country, as it is one of the largest size geographical countries, about 10% bigger or 15% bigger in land size than the United States, with 90% of the population, less that is, which is 10% of their population. As they say, Canada has a little over 30 million. America has over 300 million. Remember, these are government numbers for population, just like the unemployment and inflation numbers they give. I do question them. However, America or Canada has always been known as America's little hat. We follow the same type of economic principles. And we've been borrowing money also at the same point. So it is a global collapse in my opinion. And I think that over all the countries combined, Canada is going to be lower than a lot of other ones. What will be the better ones? I don't know. I would guess right off the bat, countries like Switzerland and Sweden, that's only a guess. And then you got over in Asia with China and Saudi Arabia. I'm not too sure. Remember, China has a lot of debt receivables that they're not going to get. How's that going to affect them? It's going to hurt everybody, as a financial explosion in the United States, them being the powerhouse of the world and having the leading reserve currency, is going to affect the rest of the world. So I don't care if you're in Canada, United States, Australia, Germany, France, the Netherlands, Jamaica. It's going to be difficult no matter where you are. Some places, though, will be better than others. I think in the United States, one of the better places to be, and this is only a guess, is places that are away from the coastlines, that are underpopulated, that have fresh water. So that educated guess would be the Midwest, Alaska. Those are the best guesses I have right now, and it is only a guess. Question, silver, based on sterling silver, is it a good investment? I have to say yes. Sterling silver is 92.5% silver. Before Canada went to the 80% mark, I think in the year 1920-ish or so, the coins were that of 92.5% silver and 7.5% other metals, mainly copper, I would guess. But when you melt the sterling silver down, the 92.5% of the coin that is silver will come in a different, well, okay. When you melt metals, they melt in different speeds, and that's the best that I know about how melting works. So that to me seems as if it is very easy to melt metals when you got 80% this and 20% this, or 92.5% this and 7.5% that. Right now it is illegal to melt silver, but rules will change, and I do believe that there's a good chance and that rule will get changed. And this is still silver to me. What you do is you take the weight of the coin, you times it by 0.925, and that is how much silver you got. You times that by the spot price on silver. If you have a tenth of an ounce of silver in junk coins, and silver is $20, the coin is worth $2. Simple as that, and I do believe that that is a good investment. Anyone who was smart back in the 60s or in the 70s to see these silver coins, they bought them, guess what? 10, 11, 12 times their money back. Smart investment. So this has been a long video. Thank you for watching, and have yourself a great day, everyone. Bye-bye.